Good afternoon. My name is EDC of Purchase Rationale. The date today is 16th of May 2023. It's a Thursday and the time is 1 p.m. Malaysian time. Okay. Purchase Rationale discusses both fundamental and technical reasons when considering a particular stock. However, I put forth a disclaimer before I start my sharing that whatever I share this afternoon is purely for information and education only. Should you make a decision to buy anything after my sharing, please first consult a financial planner or a licensed broker. Uh, I have not been making a video for quite a long while now, much thanks to the American economic situation and the banking situation. There is a lot of what I call fear being created in the market due to the de-dollarization process, the inflation rate increment, and also the interest rate increase. Okay, so that has caused much fear in the stock market, and there is not much opportunity for a stock to go trigger. Even if there's a trigger, people still stand by the site and take a watch. However, today it looks like there seems to be an opportunity that arises, and the stock in focus today is Hatta Lega Holdings Berhad. Okay. Now, let me qualify Hatta Lega. Actually, the glove stock have been one that has been besetted with a lot of downturn for the past 1.5 to 2 years. That is due to first basically competition from China glove company. That is the thing, and also maybe the average selling price issue. Okay. However, I firmly believe that the the glove market has come to its ultimate low level, and perhaps we'll see a turn around. So Hatta Lega is assumed to be turning around at this time, and I think there exists an opportunity for you to have a look at it. Okay, so for a start, let's look at Hatta Lega from the fundamental side. Uh, at the current price of 2 ringgit 25, Hatta Lega portrays an operating earning yield of 19.51%, meaning even at this price, it is able to cover the differential if it exists between the current market price and its intrinsic value to a very good degree at 19.51%. Okay. So, and it has a ROIC, return of investment, uh, at 61.68%. Okay. So if you combine the two, the magic formula qualifies because it is way above the 15% that I used to qualify for the magic formula qualification. Okay, it still has a very low and attractive enterprise to EBITDA ratio, or what I call the acquirer's multiple of 3.02. All right, has a PEG ratio of 0.255, meaning uh, it has the potential for growth. Anything below one is considered attractive, meaning there is still plenty of room for growth. Okay. Very indeed a very attractive dividend yield of 11.75%. Okay. Okay. The free cash flow seems to be quite worrying, but I believe if you are in a position over the what I call last 3 years after the pandemic of free falling on your stock, it is expected that you will have a negative cash flow. But the other indicators indicate that this may actually offset the free cash flow negative figure. Okay, the Poitras F score 6 is quite attractive. But I hope that given the next quarter or so, it will go above 7, and that will confirm that Harta Lega has made a comeback and turn around. Healthy Altman Z score 12.93, meaning despite the fact that the business was no good for the last 2 to 3 years, and despite the fact that its stock prices has come down all the way from nearly 20 ringgit to the current price of 225. Uh, uh, it is still show a good, healthy situation where Harta Lega is not going to go bankrupt in the next coming 2 years. Okay, market cap of 7.7 billion, current ratio 3.91, a healthy figure. Anything above 1.2 is considered good. Net debt is, despite the fact it has a negative cash flow, but it is a net cash company. All right. Uh, Net debt is minus 2.134 billion. Okay, so you can expect the net debt to EBITDA ratio of minus 0.41, and the retained earning is still healthy despite the few years of bad earnings from the business, operating business still has a healthy 3.5 billion. I firmly believe that Harta Lega has reached the bottom end of the graph, and quite likely it will start to go up again. And why do I say that? Let's look at the sentiment of the market by looking at the chart now. Let's take a look at the chart. Okay. If you see the chart, number one, what I can say that it has created a trend. It has reached. This is the lowest end of the price. On 2nd March, it is the lowest end it has gone, and from 2nd March onward, it has gone above the cloud, hit the MA233 line, then retrace to where the cloud is, and then has a rebound, crosses the 233 line, takes takes a quick correction, and today we see that what I call the resistance here has now become support. Okay, so meaning this momentum will continue the trend. So as the trend is confirmed, lead the momentum, although the volume is still not so encouraging. uh, I forecast that the price action will continue to go incrementally. All right. So so on the risk to reward ratio side, at the price of 2 ringgit 25, uh, 2 ringgit 25 at the closing of the midday bell today, uh, with a target price of 2 ringgit and 98 cent, and a stop loss at 2 ringgit, you will have a risk reward ratio of 2.9 times. Okay, so that is quite good. Uh, I will have to say that do not treat this as investment stock yet because the glove market is still very volatile and very subjective to the world economic condition. Okay, so you treat Harta Lega as a potentially good trading stock for the moment. All right. So remember, set your risk taking measures, risk management measures strictly, and take profit when you see profit. Okay. If you think the trading idea I shared today about Harta Lega is informational and educational, please like, share, and subscribe. Okay. If you do not understand some of the terms I use here, kindly post a question in the comment section below and I will try to explain what they mean to help you understand. Okay, thank you for listening in your time. Have a good day and bye bye.